about picking targets? You did it on Tuesday for US 30.
Okay. So first things first, there's a big difference between structure and stop losses and voids and targets. So I really hope you guys caught that. As far as I know, no one else is teaching that. Multiple industries, multiple companies wide, it seems to always be left off the table. So there's a big difference between structure and stop losses, right? Spring areas, targets, right? I know that everyone has this confuzzled amount of different words that just confuses us all. Some of y'all might be much better grammatarian, what is that word, than I am. Grammarian, there we go. Look at that. That's evidence right there. But for me, all of those, having to know 17 different definitions can get overwhelming and easily confused. So first and foremost, my first target is almost always within that kind of, I was going for like the whole concept of 1 minute, 5 minute ATR, in general, 300 pips. We need pips because not everyone comes to this call and even knows what ATR is, or they don't even, heck, they don't know that there's a difference in half of this stuff. So we need some definable number that we can duplicate with new and old. Sorry for making you dizzy. So first things first, yes, my first target is almost always within that 300-ish pip range. On a slower moving pair, it's closer to the 20s. On a faster moving pair, it's closer to the 35, 40. That's my first base criteria. That acknowledges the ability for a scalp. That gives us room for, let's see what this is. That's 500 pips to kind of give you an idea. That is not nothing. That is a lot of potential money, especially as you learn the lot size. So to give you an idea, look how close that is in this, big picture. That's only the 5-minute time frame. This is not an enormous time frame. So I'm going to have to zoom out to get it a little bit tighter, and then I'll walk through the targets. So you guys know, for the most part, I use management. And prior to using management, before I knew better, I used math. So now combining math, management, and structure, voids for my targets, that's how I'm finding them. So if you needed a list of how I find my targets, number one, I want my first really close one that's most likely to get hit. This is about 400 pips. I can live with that. Hold on, let me collect my thoughts. So if you're taking notes or writing this down, let's discuss. First things first, when I draw a line on this chart, I'm doing it for class and duplication purposes and because world record stuff. And I'll share all that with you when and if it comes to pass. That's number one. Number two, that the price point we say is never an exact price point. Like, it really feels warm and fuzzy to say we hit this to the pip or the pipette. Look how brilliant and how psychic we are. Look at the oracle. Woohoo. But the truth is, this is just an area of interest that I'm finding in relation to previous structure, previous voids, okay, previous quarter points and or targets. That's what I'm doing, that's where I'm getting all of my data. So first, take profit's always that smaller one, kind of based off of the indices and the 1 and 5 minute ATR, really sticking around that 300-ish pip range. On an index, 30-ish pip range. On a Forex pair, that can equate anywhere from like that, 25 to 35, Forex 25 to 35 index. So that explains take profit number one. Take profit number two. So this is US 35-minute time frame. Remember, we just addressed that this is not the best risk to reward trade that we've ever found. I still think it's a good one. I still think your likelihood of hitting a couple of these take profits is very, very high, but I want you to know that because it should change how you manage it. Now that we've got our first take profit, let's go ahead and drop down. My next take profit, if I'm just going to be teaching for a second, is literally going to be, I'm going to have to zoom in. My computer's a little laggy today, guys. Let me minimize some stuff. I'm going to zoom in. So Joseph, I'm talking to just you for a second. So I'm going to scoot this over. Hopefully I don't mess up any of my lines. I'm going to really hone in over here. You've got a few options. You can use measured moves. You can use quarter points. You can use structure, and you can use voids, breakout areas. I prefer to use a mix of the voids, measured moves, and quarter points. Those are my 3 determining factors. Structure is a whimsical target and only gets hit occasionally. So using previous stopping points which is really silly. And I never have actually talked about this on a call. So in IML, which you guys know, that's where I started, people focused a whole bunch on supply and demand structure, support and resistance. And I looked at those zones like really important areas. But what I found in, 6 years, 7 years, or however many years of trading was those areas as targets are horrible targets, right? Occasionally they get tapped, but most of the time they get missed, because even if it comes in that range, it'll miss it by a second and then take off the other way, which makes as a target a really risky area. So for that reason, sorry for being a little bouncy, if I was zoomed in and I'm really trying to micromanage this, I would be looking literally at the break of right here, this bearish candle right before the bullish move. This bearish candle right before the bullish move. This is what I would be targeting. You'll notice that even though this is my 300 pip target, this is kind of a comparable area. Again, this is tighter than I would do if I was just marking this up on the fly, but I'm going to do it with you just so I can teach you. This is an area of interest. So many people are going to put their target right here, and I'll put my crosshairs up so you can see it. They're going to put their target here. But what happens if we just come into this range and spark the other way? This target's not going to get hit, tapped, or anything. And now you're SOL, right? You've missed everything. Depending on how you're managing it, you could have got zero profits because you put your take profit as a flat zone here. You've got no fancy dancy, expert advanced management. And now you're just out. It went, let's see how many pips this is. I'll show you. Let's say it moved a total of almost 1,000 pips, but misses this by a smidge. Then what? You've got nothing. So you took a whole 3,000-ish pip loss when you could have taken, a 1,300 pip or whatever pip gain. So I look at these voids personally. That's a very important area. Beyond the voids, I'm looking at stuff like measured moves. So like, for example, when you see me draw up an M, I know that I'm going for the smaller, the more conservative of the two, right? In terms of how many pips am I looking to get out of this? Same thing with harmonics. Some people try to anticipate them halfway through before they're even formed. And then of course, once they're formed, how they find those targets. I'm looking at the important points, what I find important, which is the void and not the tip. And when we find a good pattern, I can show you. Actually, we can go to GU. I can show you. GU would be a good example of that. But this is, by the way, not how I would be marking up if I was just doing it on the fly. I'm doing this to show you. This is too big of a zone. So love this one. If it's my little range of 300-ish pips, it's already been hit. Love this one. There's a void here, right? This is the next area of like breakout. Notice how this isn't a bearish candle, but this is a breakout candle. This is an engulfing candle. So this would be my area right here. Now, if I ever come into a situation where I don't have anything in between here, and in relation to the size of this move, that's a pretty big, It's a little bit too fat. Watch what happens. I'm going to zoom out. I've got some other things I can use. I've got the ADR low, which is a bit too low. So I'm going to literally put one in the middle. This is not based off of anything particular. It's just that I need some way to capitalize on these pips and catch this in between. So if we get in between that zone, I want to be able to capitalize on those. This one is not based off of like a whole bunch of valid information that you can duplicate. It's just me saying, hey, the zone that I'm seeing is too large. So I will find an area of relevance if I can. If not, I'm going to go in between the two of the zone that's too wide. I'm going to drop a line. You with me so far, Joseph? Okay. So I'm going to zoom out. This is 5 minutes. We're close to take profit too. I'm going to zoom to the 15. We know what we were looking for even from the beginning of class. I wanted to wait. I was hoping to catch a little bit of that pullback. I missed it. We could have saved 1,000 pips on the stop loss, but can't win them all. So we called it, which is beautiful. It's beautiful to know where the market's going, but I got to stop saying I digress. So I don't digress. We know where we're going. Depending on what I'm looking at, every one of these has an area of interest. There's a measured move from the M, which we talked about on the 4 hour. So we know on the 4 hour, the two sides of this were what? How many pips? We had from the break of this M, the biggest side is about 35. The smallest side is about 28. I think I said 27. Notice how I'm not exacting. I'm not trying to be exact. People drive themselves nuts with stuff like that. So where's our major target going to be? Our major target is going to be kind of right and around this ADR low. So really, really simple, not perfect. You will not always get this right. You will fall on your face, but you're going to look at something along these lines. knowing that the 50 is going to come up in this range, I wouldn't be surprised to see a nice smash in the 50, potential form a wick. If this does continue up, there's a potential trend line here as well. So from the break, okay, we're breaking now. I'm going to make this not blue, make this white, if it will let me. Silly butt. There we go. White, white, white. Gotcha. So we're I don't love that. I would definitely want that a little bit closer to the actual body. I mean, it's pretty close, but I want it a little bit on this. You can see it from the line chart just so you could see the difference, which is not really gonna work the way I want. Hence the reason I would typically use the line chart from my trend lines, because I want it really touching these bodies, really want it on these bodies. You can use here where the price broke out. You can also use a little bit higher. Some people could use this part, totally up to you. That's going to bring us closer to the price point. This is the last kind of bearish swing down. That's going to give you a really close to the area, right? So we're breaking below that trend line now. You get the break of the trend line, you know, you're going to come test the previous void, which is going to be literally right here. That's 31131. So if this trade plays out how I anticipated to, this is my final target. If we break this zone, I'm looking for a pullback and all the way into this zone. That's how I would trade this. I think that answers the majority of the way I'm seeing it. So to sum it up, number one, don't look at this as that it has to be the end all be all. Quarter points have a value in my opinion, especially if I'm real close to one, I'll round it to that quarter point. But in general, think of this as a little box. It's going to come within somewhere of this range, couple pips ahead, below, whatever, depending on the time frame you're on. Number two, my first target is small enough to say, and remember, I did this before I had any fancy management. The quickest way I made the most amounts of money was I was stacking 4 trades. It took me forever to, you know, do the math on these 4 trades, but the first one would close out at a certain level of pips with a big percentage of how much the totality of that trade was. So if in total I was trading at, you know, 2.5 standard lots, and I'm sectioning out how much of each one of these is worth, the first one is going to close out of a lot. So then no matter what happens, I'm either break even or close to. First off, I'm either break even or negligible win or loss, even if I only hit that first target and it shoots the other direction. That's how most of my trades were set up. And that's with a big stop loss, mind you. Okay. Secondly, that's I'm trying to think of all the answer I can give you. I know it's in depth. I know it's got to be teachable and duplicatable. So beyond that, I'm looking at the voids, not the levels. This is it's a great stop loss for a spring, this level with the spring. I think it's a poor target, personally. And that's, I think, as I grew, the whole concept of structure with the spring makes for a great stop loss. It makes for a very poor target, and people try to put the two together. So I think that answers everything. You got measured moves, you got quarter points. Mostly I'm looking at voids, which are breakout periods, engulfing candles, right? My first target's small, and I think that's everything.